Hello and welcome to our Statutory Residence Test webinar. I'm Rachael Power, Community Correspondent of AccountingWEB.co.uk, and I'm joined today by Chris Jones, who's Tolley Director of Tax and Learning, and he's also Vice President of the Chartered Institute of Taxation. Welcome, Chris.
Thank you, Rachel.
Cheers. Well, today we're going to be discussing the new Statutory Residence Test, which came into play in April 2013. We've seen many questions about it on AccountingWEB since it was first released, and we're going to put 5 of these real-world examples to Chris later on. So to get involved, simply comment below the video or tweet us and we will look at your comments later on. So I think we should get the lowdown on the statutory residence first of all. So let's find out a bit about how it works and why there is so many questions on it. Chris, why do you think this is?
I can see why AccountingWEB has had a lot of questions on this area because the rules are complex. 60 odd pages have been added to our yellow tax handbooks this year just in the Finance Act to cover this area of the legislation. So the rules are complicated, and most client situations will not fall into the sort of straightforward categories, and it's how you deal with those cases that are in the middle. So I think the best way is for me to frame how the rules work in the framework, and then we can apply those rules to the situations that we've been given from your viewers. So let's turn then to the statutory residence test and have a look at how the rules actually work. Essentially, there's 2 ways that you can be resident in the UK for tax purposes. Either you are automatically resident because the rules are, you're here so much in the UK that basically it's a case, so black and white that you are resident in the UK. If that is the case, end of story, you are resident. The other way that you can be resident in the UK is if you have sufficient reason to be here, what's known as sufficient ties to the UK, and that's really dependent on your shade of grey, and dare I say on camera, there are more than 50 shades of grey in this area, and what the rules essentially do is that if you're in the black zone you are definitely resident, if you're in the white zone you are definitely not resident in the UK, but if your affairs fall somewhere in the middle, then you have to look at the sufficient ties test to see whether that actually takes you into the black, whether you are resident or whether you are not resident in the white area. So let's just take a look at this flowchart that really looks at how to apply the statutory residence test. And you really will firstly apply the automatic overseas test. Are you definitely not here? And if you meet the requirements, you are definitely not resident, you're in that white category, you don't have to test anymore. End of, you're not resident in the UK, and therefore your tax status is known. Once you've applied the automatic overseas test and you fail that test, you then look at, are you automatically in the UK? And if so, you're a UK resident, end of, no argument. Then after that, if at the end of the day you're not automatically in the UK, you're falling in the grey zone, then you have to turn to the tiebreaker, which is where you're essentially looking at your ties to the UK. Do you have sufficient reason to be here? And if you're here for enough of the year, and we'll look at that definition shortly, then that will make you resident in the UK. So let's look at this automatic UK test, and there are essentially 4 tests to look at. There's the 183-day test, which is the same as we've had on the statute book for years. Basically, you're present in the UK for more than half the year, you're resident for the whole year. Also, where is your main home? If your main home is in the UK and you're spending enough time in that home, that can actually automatically make you resident. If you're working here in the UK, that can make you automatically resident. And there's various other tests, a 4th test on the year of your death, but we won't go into that too much detail on that test in this particular webinar. So the 183-day test, pretty straightforward. Are you in the UK for more than 183 days in a year? And the normal rule to apply is where you are at midnight at the end of the day. So if you're here at midnight at the end of the day, that's a whole day's residence. We'll come on to that in more detail on that shortly, because there are some exceptions to that sort of day counting. With regard to the home test, the rules are not exactly straightforward, but basically what they're getting at is your main home in the UK, and have you spent some time in that home? So P, this is the wording used in the legislation, P is the taxpayer, has a home in the UK during all or part of the tax year in question, because for the new statutory residence test, there's no concept of averaging over a number of years. You look at each year in isolation. If he is present all in that UK home and for a sufficient amount of time in that year, i.e. 30 days or part days, he's present in that home and that home is available for certain parts of the year, then that makes that individual resident in the UK. While P has that home, there's also a period of 91 consecutive days, at least 30 of those falling in the particular tax year, where conditions A or B are met. So, as you can see, Rachel, we're starting to get into some complexity already. You see, so where's your main home? Is it in the UK? But then there's a whole definition. Is it really in the UK? And what if you've got an overseas home? So if your only home is in the UK, and you spend some time in it, basically you're resident. But what if you've got a home abroad as well? How does that sort of interact? So the rules start to get quite complicated. You only have to look at, well, conditions A or B are met. It's where you have an overseas home. Where condition A is you have no overseas home, fine, no problem. That means that basically you've got one home and that is in the UK. Or condition B, where you have an overseas home, but as well as a UK home, but you spend no more than a permitted amount of time in the UK, which is fewer than 30 days, which is only 1 month really. But basically, if you're spending a lot of time, you've got an overseas home, but actually a UK home, and you spend 30 days in it, and that could make you resident in the UK. So that's the home test. Where is your main home? Are you spending sufficient time in that home? Let's turn now to the brighter side of this, where you're automatically overseas. You're definitely not resident in the UK, and there are 5 tests to apply here. 2 of those apply in the year of your death. The other 3 apply in normal situations. So there's a 16-day test, a 46-day test, and you're actually working overseas. So 16-day test is very straightforward. Basically, you have been resident, so you've lived here and you've gone abroad. Will they let you come back? They will, but for no more than 16 days in a tax year. That's just over a fortnight, not even a long holiday. So if you've lived here, let's say you and I, we live in the UK, we want to get out of here, we don't want to pay tax here anymore, we want to move out of the UK, and we want to come back and see mum and dad, can't come back for very long. Only 16 days if you actually want to automatically count yourself as not resident. Doesn't mean to say that if you come back for more than you're going to be resident, but there is the issue that you're not automatically non-resident. Now the 46-day rule applies for people who have not got form here, i.e. they're living overseas and have lived overseas for for at least the last 3 years, essentially the last 3 tax years. They're allowed a longer holiday over here, or longer time to spend in the UK, of up to 46 days in a year, and as long as they don't spend any more than that, they don't actually gain resident status. So 16 days if you've lived here and gone abroad and you're coming back for holidays, 46 days if you live abroad and are just coming to visit the UK. So slightly different tests, because we want to encourage people to come to the UK and spend their money here at the end of the day. Now the overseas working test, where basically you have a job working full-time abroad. So the taxpayer works sufficient hours overseas as assessed for the particular tax year, and during that tax year there were no significant breaks in the overseas work. So a working day is counted as 3 hours, not bad. Our head of marketing is lucky to do that at some of the time. So P works for more than 3 hours in the UK on less than 31 days in the year, and the number of days he spends in the UK is less than 91. So those rules are pretty generous in the fact that as long as you can demonstrate that your main job is abroad and you're working full-time in that job abroad, you can come back to the UK for a quarter of the year, 91 days. As long as you spend no more than 31 of those actually working here for more than 3 hours in the day, you're not resident. So actually, you get far more chance to come back. 16 days if you haven't got a job abroad, but 91 days you can spend here if you have. So pretty generous rules. Let's turn now to the grey area. And this is where some of the questions that we've had on AccountingWEB really sort of come into play. The sufficient ties test. Now this is basically where you fall into that category where you are not automatically resident and you're not automatically not resident. So you're not into any of those categories. So you're one of those people, you've lived here, you've come back to the UK for more than 16 days, for example. And then they ask, why have you come here? what's keeping you coming back to the UK? And the more ties you have to the UK, the less time the government will let you spend here. So it's counterintuitive to the way you run your life. So the more ties you've got here, the more reason you've got to visit the UK, the more reason you want to come back. But that will actually make you resident here for tax purposes. So there's 5 main ties to the UK, but one does not apply to those residents in any of the 3 previous years. So in other words, there's a slightly relaxed rule if you've never lived here in the previous 3 years. So there's the family tie, the accommodation tie, the working tie, i.e. is your job or your self-employment bringing you to the UK, a 90-day tie, and a country tie. And I'm not talking here about a tweed suit. I'm talking here about you spending more time in the UK than any other country. So, just turning to each of those, the family tie is literally your close family. You have a relevant relationship with a UK resident person, which is your spouse or civil partner, or somebody you're living with as though they are your spouse or your civil partner. It would also extend to a minor child, but you exclude a child that you've seen for less than 61 days in the tax year. So in other words, if you've got a child living here in the UK but you don't see them very often, make sure you don't see them more than 61 days. Obviously that runs counterintuitive to the way you want to live life, because normally most people want to spend time with their children. And if they are a UK resident, that could be a tie for you. You would exclude, however, your child being resident in the UK if they are simply attending school here, either boarding school, and they go abroad. And the rules are complex here, and Tolley's is bringing a statutory residence test book out to clarify some of these rules. But basically, if your child then leaves the UK at the end of the vacation and comes back just for their education, then you could ignore the fact that they're spending time in the UK. The accommodation tie. Now, this is actually a looser definition than the home tie. For the home, you know, it's your main home, you're spending at least a set number of days here, sort of 30 days here in the UK. Accommodation doesn't need to be a property that you own or rent. This actually could be somewhere that's available for you to sleep. Not a hotel, because obviously you just book those as you need them, but for example, a room in a relative's home, or a loose arrangement where you're renting a room in somebody's home, rather than just a property of your own. So very much based on accommodation. So less than a formal home. Available to the taxpayer for at least 91 continuous days in the particular tax year. And that's and breaks of fewer than 16 days are ignored. In other words, the room's available and you get Aunt Agatha to move into your bedroom at mum and dad's for a period of a week. And you say, oh, it wasn't available for the 91 consecutive days because Aunt Agatha was staying that week. Aunt Agatha's got to stay with mum and dad for at least 16 days for that to actually break the 91 day sort of continuous period. So be careful there, because you might not want Aunt Agatha to stay for 16 days. I certainly wouldn't want my Aunt Agatha staying with me for 16 days. And you spend at least one night there in the year. Just one night, that means that accommodation then counts as a tie. But if it's available in the home of a close relative, you need to spend 16 days there. Actually, that could work rather well, because wherever my parents have moved home, and they've moved home 3 or 4 times since I left home, Mum always puts on a door in one of the bedrooms in the house, Chris's room. And with a picture of an old-fashioned car on it. You probably remember those old-fashioned plaques. And that's my room. And that's not going to help me for tax purposes. So actually, with pleasure, I say to my mum, sorry mum, can't spend more than 16 days here because it's going to make me resident. What a shame, I'm going to have to go back home again. Turning now to the working tie. Does the work that you do bring you to the UK? And the working tie cuts in, it counts as a tie if you work for at least 40 days in the UK in the tax year in question, and the working day, as we've already seen, means exceeding 3 hours in a day. It's modified for international transport workers, where basically that depends on where their flight starts or leaves, and you'll see the details on the rules there. So looking at things there at pilots or international air stewards, etc. Turning now to this 90-day tie. Now this is basically if you've left the UK or never lived here, and you've got a gap of residence, i.e. you're not resident in the UK for tax purposes for the previous year and the year before that, then that basically counts in your favour, in the fact that that doesn't give you a tie. But if you have been resident in the previous year or the one before that, that's another tie, because you've not given a sufficient gap You're still hanging around a bit. They want to see you go abroad and basically make your life abroad rather than keep coming back. A country tie, basically, this is where you might not spend that many days in the UK, but you spend more days in the UK than you do in any other country. And that was basically one of the issues that came out in the Gaines-Cooper case, where Mr. Gaines-Cooper didn't spend a vast amount of time in the UK, but when he was abroad, he was all over the shop. And if you actually counted up the days where he spent most of his time, as a majority, compared with any other country, that was the UK, and that would give you another tie to the UK. So you count up all your ties, and then, once you've counted up all your ties, then you turn to how many days you've spent in the UK, and what you're doing there is basing on where you were at midnight at the end of the day. So the normal rule is to count the midnight rule. Now, they have retained the unforeseen circumstance. If you're suddenly ill, you're just about to fly out of the UK and you have a heart attack and you're detained in hospital. In that situation, then they can ignore those in sort of those isolated cases. But generally, you then look at your day count. And really, the way that this works, and the tables are in the legislation, which I've repeated on the screen here, is in table 1, basically it looks at how many ties do you have here, and then from there, how many days will they let you have here? So if you've got 4 ties here, you spend more time in the UK, you work here, you've got your family here, and you've got accommodation here, they'll let you spend between 15 and 45 days. Anything up to 15 is all right, because you've got your 16-day rule anyway, because that's automatically non-resident, but you're allowed 45 days. So if you wanted to spend longer here, you'd have to then remove a tie. So you'd have to either spend more time in another country than the UK, or, for example, move your spouse to live abroad, because that removes a tie. And that might kill 2 birds with 1 stone. Yeah, because you can remove your spouse to go and live abroad and spend more time in the UK at the same time. For some people, that could be quite a win. If you've got 2 ties here, then you've got less reason to come back, but they'll let you spend more time here. Without counting your resident, you're allowed up to 120 days then. And if you've only got 1 tie here, then you could spend between 120 and 182 days, because once you get to 183, of course, then you're resident in the UK. Table 1 applies to people who are living here and leaving. Table 2 applies to people who have not been resident in the previous 3 tax years. Either you've lived here once but not come back for a while, or you've never lived here. You're visiting the UK for the first time. In which case then, you cut in at your 45-day test. 3 ties will allow you to spend up to 90 days here, 2 ties 120, at least, and 1 tie 120 to 182. So, as I say, the way you plan your affairs is the first thing to do is to look at the automatic tests. Then from there, look at, do I need to apply sufficient ties? So you count your sufficient ties, and then from there the advice to the client is, right, how many days do you want to spend in the UK? And if that is going to be taking you over, that will determine your resident status. So the rules are quite complicated. You're looking at your ties and you're counting your days. So just briefly on counting the days, there is just one extra rule that we all ought to be aware of, and that's on how we actually count those days. And the rule is where you are at midnight at the end of the day. But if you are one of these people, for example, let's say you live in Dublin and you've got a job in Belfast. You are crossing the border into the UK every day. Now, if you're never here at midnight, you will sleep in Dublin, but you drive to Belfast every day for work. The first 30 days don't count as a day in the UK. But once you go over 30 days, every day you're in the UK for even some of the day, that will count as a day against you and could make you resident, even though you never sleep in the UK. So, and that if that takes you obviously over the 183-day mark, that could make you resident in the UK. So that's, just be careful of people that are crossing the border. Is that the midnight rule is overridden once you get to more than 30, what they call qualifying days. You've been in the UK for at least some part of that day. So, although that was quite a long spiel, that sets the framework. And as I said, the rules are not exactly straightforward. There's lots of little moving parts in it. But firstly, are you automatically resident? Yes. End of. You pay tax accordingly. Are you automatically not resident? Fine. But then you have to look at your sufficient ties, and then from your sufficient ties, then turn to the tables to decide then how many days you can spend in the UK.
And thank you very much, Chris, for that in-depth view into the statutory residence. We've got 5 real-world examples of situations from AccountingWEB members with us today. And I'm going to begin by asking you, one member asked us, if a person is working full-time abroad and has done so for years, for example, qualifying as non-resident for UK for tax purposes, how does that leave the spouse who isn't working or maybe working part-time? If the days in the UK increase and if the spouse has to qualify for non-residency under the significant ties test, could there be a harsher restriction on the number of days they spend in the UK?
Well, that actually nicely links back to Table 2. So if I can just wind that back to Table 2 on the slide there. I'm assuming that this individual, they're working full-time abroad, and this individual therefore has been non-resident for some time. And therefore we are looking at Table 2 because they've not been resident in the UK for the last sort of 3 years. So we would then need to look at, well, what sufficient ties do they have in the UK? Do they have accommodation here? And if they do, could we remove that? Do they have a child here, a spouse here, which gives them a family tie? Are they spending more time here than in any other country? But just looking generally at the sort of what we're looking at in the facts, although it's hard to advise obviously on a sort of a broader situation here, but assuming that the client in question does not have any specific ties in the UK, you know, maybe they might have one tie, because if you've lived here once, you're always going to like to have one tie. You can still spend a reasonable amount of time here, you know, up to 120 days, or more than 120 days, up to 182 days, essentially, if you've only got the one tie here. So you need to look at the ties. Once you've actually determined the ties, then that will determine how long your client can spend in the UK. So is the restriction harsher? Well, it just really does depend on the number of ties. So look at the ties and then determine the days. And then that will give you your answer. You might not like the answer, but at least you can give one to the client.
Excellent. Thank you very much, Chris. On to our second question. If a person has achieved non-residency status recently and has made use of the averaging rules to keep within the under 91 day rule to satisfy the 3rd automatic overseas test, is it true that the person has to spend less than 91 days in the UK in a single tax year and can't rely on averaging?
Now, that is absolutely correct with regard to you can't rely on averaging. I remember the good old days of IR20, when that was basically the gospel, this revenue pamphlet, which we embodied into our yellow handbooks, which basically set out all the rules of residence. Now, the 91-day rule was never a statutory rule anyway. It was just one that was sort of adopted as practice. Now, this 91-day averaging rule has disappeared. There is no concept of averaging over tax years under the new statutory residence test rules. So you have to look at each tax year, i.e. tax year X, in isolation. So no averaging. So the averaging rules have disappeared. The only time when the days come into account for previous years, if you may recall in my explanation, is to determine whether you are looking at Table 1 or Table 2. So here's Table 1, this reminds me of my eye optician test. Here's Table 1, is it clearer? So when you're looking at sort of, have you spent time in previous tax year? If you have, Table 1, because it's harsher, more time, less days. And Table 2 says, well, if you haven't spent more than 90 days in previous years, then it's a slightly different test. So that's where the sort of rules cut in. So that creates a tie. If you spent more than 90 days in the UK in a previous year, that creates a tie to the UK. Now, before the 6th of April 2013, the under 91-day rule was relevant in determining whether or not an individual was ordinarily resident in the UK. An ordinary residence was a concept then. Following Finance Act 2013, there is no concept of ordinary residence. It has been abolished. So again, that rule has disappeared. So essentially then, no, you can't rely on averaging. You need to look at Table 1 and Table 2 in conjunction with the number of ties in the UK in isolation each year. So you can't average one out with the other. So say the only time previous years are of relevance in determining whether you have a 90-day tie with the UK in previous years, or to work out residence in previous years, to which table you're actually looking at. But that's not just the 90 days, that's the overall residence test. So hope that answers the question. No averaging counts anymore.
Excellent, thank you very much, Chris. Going on to the third question, if a UK citizen is moving to another country but keeping a property in the UK, will they automatically remain resident in the UK even if they don't come back for a while? The citizen also holds a dual passport with the country that they're going to live in.
So this sounds like a very specific test. So UK citizen moving to another country but retaining a property in the UK. Well, a property in isolation doesn't sort of determine your resident status. So the fact you keep your property when you move out of the UK, no, because if you think about the automatic non-residence test, as long as you don't come back to the UK for more than 16 days, then you don't need to worry at all, because you're not going to be resident in the UK, you are still not resident in the UK. The other thing to bear in mind is that you could count against you if it's your home, i.e. the home test cuts in and you spend X number of days in it as your home. One way to solve that problem, if you want to spend more than 16 days in the UK and you're going to spend time here, the advice would be let out the UK property so it's not available for you. You might still own it, but if it's tenanted, it's not available to you. And as a result, it doesn't count as a home. If you let it out for the whole tax year, it doesn't count in any way, shape or form. If the property remains available for you to use, it may be relevant if the individual spends time with that property on more than 30 days during that tax year. So if you don't rent it out and you come back, and when you come back to the UK, you spend time in that property, and that adds up to more than 30 days, that could make you resident here from the home test automatically. So that's the home test. That's when you're leaving the UK and you keep your property. The other time, of course, that property features is around whether it creates a tie. So let's say that you manage to keep away from the automatic resident rules, you're not in that black zone, so you either spend less than 16 days here, or you actually don't establish this property as your home, or you spend less than 30 days in it, fine, not resident. But what happens if you spend a bit more time and you sort of cut in there? So you manage to avoid those, but then you want to visit the UK. Of course, it could be counting against you as an accommodation tie. Again, renting it out will remove it from that status. So the other part of the SRT where continued ownership of a UK property may make the difference is when the accommodation tie comes in, and then you have to start counting up your sufficient ties. Now, assuming that the individual is moving to another country, so I'm going to flip back in the slide to table 1, we are looking at somebody who has been resident here for a previous 3 years, then you have to look counting up the number of ties. If when they move abroad, they take their family, they have a job abroad, etc., etc., then basically they're allowed to come back to the UK for more days the less ties they have. So literally the only thing in the UK that they're coming back to is that property. They can still spend a reasonable number of days here, you know. And that's where you refer to that table. So the accommodation sort of comes in 2 things. The advice generally is don't make it your home, don't spend 30 days back here, keep under that 16-day test to start with so you don't end up in the automatic rules. If you don't meet those rules, then if it does count as a tie, you still then have a look at the number of days that you can spend here depending on the table. Excellent,
thank you very much, Chris. So our 4th question is, if a person leaves the UK to work in another country for a period of years and lets their unfurnished UK home, with rent receivable in total not equaling to UK personal allowances and losses are likely to occur, then why do they need to fill out a UK tax return and go through the non-resident rigmarole? Apparently there is no other UK income with this one.
Okay, in this situation, the statutory residence test hasn't changed anything here. HMRC will expect the letting agent, the UK agent, in the UK or the tenants of the UK property to operate the non-resident landlord scheme and deduct basic rate tax at source from the rent. If there is no other UK income and the rental income is less than the level of the landlord's personal allowances, then the non-resident owner is not generally expected to submit a self-assessment return. So there is no rigmarole, provided all the facts in the question hold ring their way through, then the non-resident scheme will apply as normal.
Brilliant, thank you very much, Chris. We're going to our 5th and final question, which is rather a long one. So a person is working through a UK limited company as a consultant and doesn't work in the UK, but does spend less than 90 days here despite having a spouse and home in the UK. They're supplied work by a company in Germany who pay the company fees and travel expenses reimbursement direct to the UK. The person also travels around the world, does not spend more than the statutory number of days in any country to be deemed resident there. An accountancy firm has told him that he must be resident somewhere and came up with the UK. But given the new statutory residence test, they seem to be going tax-wise around the world in circles. Have you got any tips or advice for this situation?
This is where we start getting into the sort of the more complex scenarios, and this is unfortunately the ones that are most difficult to advise on. But if on the line taken by the previous accountancy firm, HMRC has accepted that this individual has been resident in the UK for at least 1 out of the past 3 tax years, then the country tie test, where could come into play that we talked about earlier. That test would be satisfied if he spends more time in the UK than in any other country. Given that this person has a home and a spouse in the UK, he could be resident in the UK if he spends as little as 46 days in the UK, if he spends more time here than any other single country. So you're actually looking at then counting up that, those ties and looking at the resident status. Without knowing more about the circumstances of this consultant, it is of course hard to discern whether he is better off being resident for tax purposes in the UK or elsewhere. Given the facts outlined, it looks like the consultant may be in a position to make minor adjustments to his arrangements to take himself out of the UK residence if he would be better off to do so. And the ways to do that, of course, would be, for example, to perhaps move his wife abroad if he's spending enough time there, or if that suits him. There are things that could be done to adjust his life, spend the amount of time he comes back to the UK, but we are looking at, again, this is likely now to be table 1 because it looks like he has been resident, he hasn't broken that resident status. And then you look at the ties here, and you look at the number of days. If you can make adjustments, either by removing a tie or adjusting the days spent in the UK, remember that midnight rule, then of course adjustments can be made. I think one important point comes back here, which is sort of the last bit about going around the world in circles. One thing, unfortunately, that the UK statutory residence test does not help determine is if we determine that he's not resident in the UK, it doesn't actually produce an answer as to which country he is resident in, because that's going to be dependent on the rules of that particular country. So whilst we can determine UK residence, it's not going to help determine residence in any other country in the world, I'm afraid.
That's excellent. Thank you very much, Chris. Well, we've come to the end of our webinar now, and just want to say thank you very much, Chris, for answering all of our real-world examples in great depth. So thank you very much.
Pleasure.
Excellent. And also thanks very much to Tolley for hosting the webinar. That's all from us. Goodbye.